about getting the information you needed to do your audit.
Correct.
Okay.
And then in fact, when you compare it to the prior year, which is maybe not the best comparative year, the information and the reports coming out of SAP largely really improved the data that we were able to get. So we were able to get a lot of data in a very easy manner because of SAP.
All right.
So
I got it when you said yes.
Yes.
All right. And we will, want to take a few minutes to talk about the cybersecurity after
absolutely.
Go through. So please continue with your presentation.
Sure. So, as I said, full cooperation. We got all the information that we needed. There were, there was this. The outstanding list can be very large at any one time. So it's not as if, there's always a list getting added to and taken away. But from a project management, from a status update, everybody on the team seemed really willing to get us everything we needed to get the audit done.
Including our excellent internal audit.
Sorry?
Including our excellent interior auditor.
Including your excellent internal audit team. So we did utilize the internal audit team for some of our testing, and we do review all of the reports that are issued by internal audit as well.
Thank you.
So the next page, page 4, when you look at the results of our audit, there's a couple key things that we do need to just communicate with you, and mostly I hope you know what they are. So the first thing is you did implement a new standard this year in GASB 75. So as was the case a few years ago, the Government Accounting Standards Board, they look at just overall governmental financial statements and what makes sense to change. And GASB 75 is for the other post-employment benefits associated with your pension plans. So in this particular case, the majority of it there is your OPEB, what we call OPEB for PERS. Now, a few years ago, you had to implement GASB 68, which put the PERS liability, the whole amount of the underfunded portion that relates to municipality, onto the books for the municipality, onto the financial statements. And then, but that didn't include those other post-employment benefits, like healthcare, which is the largest component of that. This year, they did require you to implement that standard and to put it onto the financial statements. So you did record a liability and a restatement, which isn't an error on your part, but just a new implementation of a new standard related to those other post-employment.
What was the magnitude of that liability?
The total liability, do you have that?
It's $190 million.
And that's municipality-wide. And there is a...
All right, that's fine.
Yeah.
Any other questions, comments so far?
Yes, I know. That might just be the meeting portion. Oh, the balance at year end, but the restatement was a little bit more than that. So the restatement was more like 230,000, 228,000, 200 million. Yes, I'd love it to be 1,000. That was at the beginning of the year, so at the beginning of 2018. But then you did pay down that balance over the course of 18.
Right. So the 200 million. How does that compare to our total liability, outstanding liabilities now? Just by magnitude.
Well, I can answer that.
Go ahead.
Okay.
So your total liabilities as of year end were $2.6 billion.
Okay.
And 190 million of that is the OPEB, and then 430 million of that is pension.
All right. Any questions or comments? Those are interesting things to know.
Mm-hmm.
Alex, sometime you might kind of show us a picture of that and the times when those things come due, in the out years. Some of them, I suspect, are 20 years out, right?
Correct. I would say that the liabilities you have related to your bonds and loans, those are all known, and actually there are notes in the statements that will show the amounts due in future years. The pension and OPEB liability is not structured in a way in which it ever actually becomes due. The municipalities just continues to keep making payments based on a percentage of payroll. Right now it's 22% of covered payroll into PERS every year, and that's how much you'll pay on that liability until the state changes the contribution requirement.
Unfortunately, it's not one of those liabilities you can pay off.
Yeah.
Because the liability is an estimate based on how long people will live, how expensive healthcare will become, all of those kinds of things.
Yep.
So, really that's an unknown liability. It's an estimate. It's based on an actuarial evaluation of all of those things. But as Sam said, the amount you pay is still set statutorily by the state. So it's not something.
And Ms. LaFrance is making it worse. She's trying to get us better health care. People live longer.
Thanks.
All right, thank you.
You're welcome.
Please
So-
continue.
So that's one of the biggest changes I wanted to bring up this year. And then the other thing that I'll mention is that you do have quite a few estimates in the statement. So not everything in the statement is $1 that came in the door, $1 that left the door, $1 that you owe to somebody. And obviously, if you have $1 in a bank account, it's pretty obvious what it's worth. But there are some numbers in these statements, including the pension liabilities, that are estimates. There are a few here that I've got, or Sam put on page 4 there to talk about. And one is related to your allowance for uncollectible accounts. So this is when you have charged someone money for any type of thing. How likely are they to pay it? You know, what is your potential risk there for uncollectible accounts? And that's based on prior experience, primarily historical trends. Your utilities tend to have very low uncollectible accounts because they don't like it when you turn off the lights and then they pay their bill. But that's not always the case for all of your other types of accounts. The pension liabilities and the OPEB obviously are an estimate, although not based really on anything you can affect. The next one is related to your IBNR for your self-insurance liabilities. So this
IBNR means?
IBNR is incurred claims, but things that haven't yet been reported. So nobody has actually sought reimbursement for those yet. And that is just based, again, on historical trends, what you typically have when you get that information. So those bills aren't always received immediately. So there's an estimate there. Your landfill closure cost is also an estimate. So that's based on usually an engineering report, an external report, where they actually go through and figure out how long the landfill is expected to last, how quickly are you filling it, and what the cost will be when it does get closed.
Sure.
For capping it and adding in the dirt and all the different things that have to happen. The next one is your environmental remediation liability. So for any types of environmental claims that may be out there, how much that liability is estimated to be. If the cleanup hasn't occurred, you don't necessarily know what the actual cost is. And then lastly is related to asset impairments. So any sort of impairments that you have. The biggest one here is actually impairment for SAP that was recorded last year. Are there impairments that are significant?
Related to the earthquake, there was a facility at Eagle River related to solid waste services that was damaged to the point where really no return, so the asset was written off completely.
And so this year, because of the earthquake, that's one of the things that we did go through to look and see if there were any additional asset impairments that might need to be considered. We looked at the assets and the reports that came out of the earthquake evaluations to make sure that any of those impairments were properly evaluated. So that was a pretty significant event this year that affected the municipality. But the criteria for impairment doesn't mean that the building or the asset was damaged. It really is, can it be repaired? Are there mechanisms in place to get that in place? Does it still have the same service utility? So is it still going to be able to be used for that purpose that is in line with what its original use was? So really that was the only one related to the earthquake. And then for some of the utilities, they did have some additional costs, but for the most part, or to my knowledge at this point, either they will be recovered through, hopefully FEMA would be the goal, but otherwise they would we'd have to build that into the rates for the customers going forward, and that's consistent with the way other regulated utilities do that nationally.
Question?
Suzette?
Thank you, Mr. Chair. Can you tell me what pages in the CAFR I can find the financial statements regarding the environmental remediation liabilities?
Sure. So there's a couple of disclosures is probably the best place to find it.
If you go to page 116, there's a long note about the various pollution remediation obligations.
And the contaminated sites claim.
Yeah.
And then are the other liabilities included in this narrative section as well?
Yes, so starting on note, I believe it's note 10 is the long-term debt. So that'd be all the municipalities' bonds and loans that are outstanding. And then going on to Note 13 is the pensions and pension liabilities, and note 14 would be the other post-employment benefit liabilities.
Thank you.
And then most of the other liabilities that, are in place are going to be towards the end there, note 20. And I believe there's a litigation note as well. Contingencies is note 19. So,
Sorry.
Yes, please.
Note 16 discusses risk management and self-insurance, so that is where the IBNR disclosures will be located.
thank you, Kelly.
Mm-hmm.
So with that, I'm going to turn it over to Sam to talk about the corrected and uncorrected misstatements, which is the next section of the audit record.
Thank you, Joy. So on page 5, we are required under our professional standards to communicate to you anytime there's a misstatement that we come across during our audit that we determine is greater than clearly trivial. And those are, and if management agrees and elects to make the correction that we propose, we refer to those as corrected misstatements. And then the other types are uncorrected misstatements. So same situation, the only difference is management has elected not to make those changes. And keep in mind, regardless, we have the number of types of misstatements we had. We're still confident, based on our audit work as a whole, that there's no material effect either by an individual uncorrected misstatement or all uncorrected misstatements in the aggregate. So they had no effect on our ability to issue an unmodified opinion.
Excuse me, Sam, give me an example of a couple of those
Certainly,
misstatements.
We can go through all of them.
No? Well, just give me an illustration.
Okay, so actually in the last 2 pages of the audit document, all the uncorrected and corrected misstatements are listed. Both a description of the account, the adjustment itself, and also a dollar value. So I'll just go through the uncorrected misstatements.
No, if they're there, I could read.
Okay.
And don't take our time.
All right. Well, if there's any in particular you'd like me to talk about, I'd be happy to. But just to conclude, the effect of the misstatements did not impact our ability to issue an unmodified opinion. And to go on to page 7, we can talk a little bit about internal controls over financial reporting. So we do not issue an opinion over internal controls. However, we do evaluate them as it relates to our ability to issue an opinion on the financial statements as a whole. So if we become aware of deficiencies in internal controls that we think would impact the financial statement balances that we're issuing an opinion over, we would make that known to management and those charged with governance. We are required by our professional standards to report to you any significant deficiencies or material weaknesses that we're aware of. This year we only identified one significant deficiency, and I say we only identified one. If you remember, in the 2017 audit we identified 8 either material weaknesses or significant deficiencies. So to go from 8 reportable findings down to 1 is a huge improvement, and it really speaks volumes to management and everyone in accounting and finance taking the time to reassess and reevaluate and fix broken internal controls to help prevent errors in financial reporting. So I'll talk a little bit about the one significant deficiency we did know, and it is related to compliance and had to do with the test work we performed as it related to your state single audit. So we tested, one of our tests relates to special testing provisions. In particular, we test whether or not the municipality has been retaining copies of certified payrolls for construction work that is done by third parties. It's a requirement under Alaska statutes. For one program, we tested 4 different time periods, and we identified one time period in which the municipality did not retain a copy of a certified payroll. We brought this to the attention of the Department of Public Works. They admitted it right off the bat. They didn't argue with us, and they agreed that they would redesign their internal controls to make sure that all certified payrolls are received timely and retained by the municipality going forward.
So one thing I'll just add to that, this finding is reported as a significant deficiency, so it didn't cause us to report a modified opinion or a qualified opinion on the compliance. We were able to determine that the municipality did in fact pay the correct wages, that the provisions of the contract with the contractor were fine, that, really this is a control issue, and it's not something we think that is a material weakness level. It's something that we need to bring to your attention. You need to be aware of it, but we don't believe that it could, at this point, that the way it was designed could cause material non-compliance with your grant program, which is really important to know. The other thing I'll mention here is that while we do have to understand, and Sam mentioned it, we don't issue an opinion on internal controls, but I think everybody thinks that an audit is, oh, well, the auditors looked at that, we must be okay. And so I do think it's important just to clarify what our role is in internal control. And first of all, we're an external control, not an internal control. So that's one thing I'll mention. It's very important to keep that in mind. You have internal auditors, you have staff, you have procedures, policies, systems in place that are great internal controls, but we are external to the municipality and on purpose, right, the independent auditor. But we are required to evaluate understand what your controls even are over your significant transaction cycles and accounts. Then evaluate them. Do they appear properly designed? To the extent that it impacts our ability to perform the audit as a whole. And then to the extent that we want to rely on those controls, we might test some. We actually do look to see that they were happening at some point even throughout the year. We bring in an IT audit team that actually looks at your system to make sure the design is set up properly, it's calculating things correctly. And that was one of the areas where there were several recommendations last year with SAP that seem to have largely been implemented. But I think it's important for you to know that there were no findings in internal control that we need to bring to your attention as it relates to the financial statements themselves. This one is for compliance, but as it relates to the financial statements, we were able to clear all those issues and didn't have any additional ones to bring to your attention. That doesn't mean we don't have what we consider to be management letter type of things, those business advice suggestions, and while we don't put those in writing on purpose, those are things we just communicate. Hey, this is something that other people are doing. You might want to look at that. Or with the IT system, there were quite a few little recommendations on how to make SAP function more properly. So I think that's something that just be aware of to make you aware of the process and how we go about that. So then, as it relates to other required communications, you want this section to be rather boring, which it is. We didn't have any difficulties or disagreements. Certainly, it's a big undertaking, an audit of this size. So, your team was excellent at providing the information. We tried to do very regular updates. We met with the team here quite often just to make sure we were all on the same page. There's a lot of back and forth. A few things I'll mention on this page is that, as I said, we did use our IS team, our IT auditors, to help with the SAP system, but they also look at some of your other systems that you have in place to make sure they're integrating properly and set up. Primarily that's for access controls. Who can access the system? Do they have the right rights in the system? Can they do what they're supposed to do? Or do you have a payroll clerk that can release funds to the bank? That's what you don't want to have in place. And then we do actually look at the actuarial reports for the pension and the OPEB plans. We have our external actuary as well. They're part of BDO. Look at that and make sure that the assumptions that are used here at the municipality and statewide are reasonable in nature.
How long have you all been doing audits for this city?
11 years?
Yeah, this is the 11th year BDO / McCundy Cottrell has audited the municipality consecutively, and it's my 9th year working on the audit.
I was a manager on the audit the very first year, and then I stepped away from the audit for a few years, so this is my 2nd year back, and it's fun to be back and see all the progress that has been made, even from the audit side. Audits are very different than they were 11 years ago. We're doing a lot more data analytics, and with SAP, we were able to get a lot more data that we could use. So the more years of data we have from SAP, the more effective those data analytics will be. And I fully expect in the next couple of years that I will be able to give you some charts and tables that explain some of the data that's happening in the meeting.
Is it a fair assumption to say that your analysis of the actuarial assumptions is that they're reasonable?
They're within the ranges that make sense, yes.
Okay, thank you. Any questions? All right, please continue.
So
Excuse me, do either of you have hard time constraints here? We started about 15 minutes late.
I think we're primarily done with the audit wrap-up. There's a couple key highlights to talk about that are coming up. So this is a good time to talk about the standards that are going to be coming up in the next couple of years. So page 11, 12, 13, give you a little bit of, and 14, give you a little bit of a taste of what's coming up. The one I would, and Sam might want to talk about a couple other ones, but I think the two big ones that I want to mention, one is related to your asset retirement obligations, because you already have essentially an asset retirement obligation for the landfill, but that's actually related to a separate GASB statement. They have a separate statement just for landfill closure costs. Now they've added a new statement related to other asset retirement obligations because there was quite a lot of different ways that people were valuing them and they weren't consistent. So now, and you already do have some AROs recorded for example, for your gas assets at the MLP side, right? But now there's going to be a little bit more evaluation that needs to happen as it relates to your other assets and if there are retirement obligations. These are primarily environmental regulations that would require certain activities to be done to cap something or pave something or cover something when it's done. We see this in sewage treatment, so that's something to mention there that it would be worth having your team looking at. And we've already talked to Alex and a few other folks here to make sure that that's in the back of their minds. The other one I'll mention is on page 13 as it relates to leases. And this is happening on the private company side too, not just governments. You will be recording all leases on the books, where in the past you only recorded capital leases. So if they were for capital type of assets, they almost recorded like debt. You had a liability to pay them off basically over a period of time. In 2020, you will have to record these as all operating leases. Even if you're just leasing a building from somebody or leasing a building to somebody, you will record these as assets or right of use asset and a liability to pay it, or a receivable and basically a liability to allow someone to use that asset. And so that's something we've also talked about with your team, having a comprehensive lease schedule, all the leases that are in place of the municipality, and then hopefully they can work with you to establish, or maybe even the assembly as a whole, to establish a threshold that makes sense, because it doesn't make sense to record a $1 lease or $100 lease or maybe even a $10,000 lease. Anything under 1 year is exempt, but sometimes you can have a lease that's a 50-year lease, and so if you look at the life of the lease, it could be a very significant number. So you can't just look at how much the payment is each year, you need to look at the term of the lease as a whole. So that is a big standard that's just going to require a lot of legwork, and I know all the departments are starting to look and work on that. Any other statements you wanted to mention?
No, I think 87 will have the biggest impact. So you have a couple of years on that, but it's not complex. I would not consider it to be complex. It's just there's a lot of volume that needs to be considered, so it'll be time intensive.
So page 15 is cybersecurity. Yes.
Can I ask a question about that? Is it right to think that when these GASB rules come into effect and newly change the way we were reporting everything and consolidating into financial reports, that the real world state of affairs doesn't materially change? Now, numbers all look different, but everything we were doing, we continue to do. Does it have any secondary or tertiary effects, like on our bond rating, because newly we're reporting different kinds of liabilities, or no?
So I think all the bonding agencies, or at least the credit agencies, are aware of the standard, and they know that your statements will look different. They're all getting training, they're showing up to our trainings, they're doing all of that. So I think they are informed of the process. Your covenants, to my knowledge, should not be impacted by any of this. And to the extent that your budget impact, you're correct. You're still paying the same amount, you're still recording the same amount. The only thing I am seeing is that it's giving all of our clients a chance to review, a comprehensive review of all their leases. They're finding quite a few documents that are maybe expired, or nobody can find them, or we've always paid $10,000 a year for that lease, but there's nothing legally that actually allows that or is in place. So it's really more of a cleanup effort than anything. But no, I don't believe it should change much. The only time that it may impact your financial reporting is that leases are required to be straight line reported. So if there are escalation clauses in place, let's say you have a 5-year lease and there's escalations each year, in theory you have to straight line that. It doesn't matter how much you're paying, It has to be a straight line. That being said, almost always it's not material, and so most people aren't doing it that way anyway. But that was the standard even before this came out. So it's a little bit different in governmental funds, as well as because of the modified accrual type of thing. But yeah, primarily it's a documentation part of it, which isn't a bad thing.
And it's not going to impact some of the lease-back transactions that we've done.
Lease-back transactions are actually excluded under 87.
Okay.
Yeah, they've excluded quite a few things from that standard, but yes, those are excluded. So let's touch briefly on cybersecurity.
Oh, I'm sorry. I should have read this more carefully.
That's okay.
So, did you audit our cybersecurity?
So excellent question. We do look at some of your IT general controls, is what we call them, to ensure that the municipality as a whole does have IT general controls in place. That's only as it relates to how your systems work and how we have to rely on them for our audit procedures. But no, we did not do a cybersecurity audit. It's certainly something we can do. Cybersecurity audits can run the gamut from just a very high-level risk assessment, where you just come in and do an analysis of what your biggest risks are, so that your internal team can do things, to all the way up to doing a full-blown cybersecurity audit, where we actually have, and lots of firms do, we have hackers on staff, and they try to break into your system and show you where your vulnerability points are. They call that a penetration study. So I have this in here because you've all read the news, and it's hitting different cities. We talked about it in January. Certainly something that stresses me out and keeps me up at night when I worry about my clients not paying attention to that. But you do have a new SAP system. Unfortunately for the municipality, or fortunately, it's not all sitting in SAP. We've had a lot of cybersecurity attacks that take down infrastructure, and maybe you don't lose any data in SAP, but you lose all the data that's going into SAP. Or you lose the hardware. At Matsuboro, they didn't lose any data really. They lost just a couple days of data. What they lost was all of their hardware had to be replaced. Almost all of their hardware.
You mean the operating system?
I mean the servers, the actual server boxes and their infrastructure.
So an electronic message ruined those machines?
It became less cost effective to try to save them than it was to just start from scratch. And because of the vulnerabilities in the system, they couldn't fix that without opening themselves back up to another attack.
Oof,
Yeah.
that's Norwegian for wow.
Yeah. I gathered. It's not a great situation for them. Theirs was a Trojan, what they call a Trojan horse, and it was sitting in their system for quite some time. So, and it was an email link that somebody clicked on and it installed it in there. The cybersecurity challenge is a real big challenge, and it's getting expensive. What you don't want it to do is be a $2 million cost. I'd really recommend you take the time to spend the money throughout every year for some level of penetration testing, because if you do that, that's the insurance policy. It's essentially the cybersecurity, regular cybersecurity auditing is an insurance policy more than anything, to prevent a huge loss of data or a breach of confidential data. And you do handle quite a lot of confidential data, people's names, addresses, contact information, property records, to some extent even with some of your social types of programs, even income data and demographics data and other kinds of things. So,
Your nurses.
your nurses, public health information. So a cybersecurity attack at the municipality, ambulances and all of that kind of stuff could have much higher, far-reaching consequences, and could open you up to lawsuits or those kinds of things. So I'll just throw that out there. I think it's cheap insurance, personally.
Well, throw this out. If we ask you to do a complete analysis and audit of our system, what would that cost us? Round numbers.
So I would say what I'm seeing is primarily anywhere from $50,000 to $300,000, depending on which systems at an entity that you want looked at. And then the ongoing cost, once that is done, is less. Basically then ongoing is going to be maybe, I've seen anywhere from a quarter to a half of that number for an annual update of that.
Right. Thank you.
I would offer that what the municipality does do, and I think what Joy illustrated is the vulnerability that everybody is aware of is, you know, your people are your biggest liability. They click on something they shouldn't, and you have a problem. So the municipality very regularly requires every person on staff to go through training on how to identify various forms of hacking, how Trojan horses, whatever you want to call them, spam, email, all that kind of spear phishing, the whole gamut. And they also actually send fake emails to people to see if they, in fact, will click on them, to see if they will violate the policies.
Mm-hmm.
So the staff, you know, all you can really do is keep telling people every day, if you don't know the person is sending you the email, you don't recognize it, do not click on it. That's really, you know, your first and foremost source of defense.
I would assume that somebody that really wanted to get us could bribe some employee, you know, into do it.
But the question is, what, you know, yes. I mean, you could, but what would they get?
Yeah,
right?
yeah. So, all right. Thanks for taking the time. Appreciate it.
Well, it's on here as a page because we think it's important. It's something that certainly, as a citizen of the municipality myself, I don't want to ever read that in the paper or get the phone call from Alex or anything. I would love to keep that out, and I just think the preventive side, when you look at internal controls, and IT controls are just as important as financial controls. When you look at internal controls, there's two different kinds. There's preventive controls and detective controls. This is one of those types of situations where you want the preventive controls to be working and working well. So that's it on the audit wrap-up. We're happy to go through the CAFR at a high level if you'd like. It's entirely up to you. But that does conclude all the areas that we wanted to cover from an auditor's report perspective to you as the audit committee.
So, to my colleagues, you know, any questions, comments, or more things you want to look at and consider?
Well, it's hard to shift gears away from the cybersecurity conversation. I know in the last meeting of this committee, we talked some about that, and Ms. Marshall was here and described some of the activities that the municipality does to ensure cybersecurity, and I know it included penetration tests and offsite storage, and then the training too for employee resiliency. And I guess my question is, we know, Mr. Dyson, we could do an audit. Are there other things that we could do? Maybe this is a question to Mr. Falls. I mean, does the IT department, and it's a little bit off topic, I know, from
It's really not.
CAFR,
Yeah.
but does the IT department feel like they have the resources they need to create a program and have the defenses that are appropriate, or is there a piece missing, or how do they know that we're on the right track?
Well, I'd have to consult with Susie Marshall. I don't think I'm going to give you a good answer on that today.
Okay, fair enough.
Can I make one comment on that?
Mm-hmm.
Last year, the AICPA, which is the American Institute of CPAs, Certified Public Accountants, came out with a cybersecurity audit guideline. And so one thing to keep in mind is, just generally speaking, the IT departments are very well versed in this. Your IT department is very well equipped to assist the municipality in staying safe and having the right technology. At least my interactions with them and our team's interactions with them, that they would fight for what they needed to feel safe and secure as it relates to your cybersecurity, which is excellent. However, that cybersecurity plan that they have in place was developed by the IT department. And so, I realize this is the auditor saying an audit is a good idea, so I'm not, whether you use our firm or another firm. I do want to say, though, that the advantage of an auditor is it's somebody who's outside of the IT department telling you these are the things we found. And if they find nothing, it's something that maybe you don't do testing going forward, or you start with maybe the the risk assessment or the gap assessment, the lower one, and if there's any red flags, then you go in and do more of the external penetration testing. But having somebody who, it's almost like having your controller auditing the controller division, you know, you need to make sure that there's somebody external to the IT department looking at it with fresh eyes, external eyes, and doing that. And there's lots of ways you can go about doing it that are outlined in those standards. So I'm happy to send those to you as an audit committee if it would be helpful. We do have I don't even think it's a BDO thing. I think it's an AICPA briefing on what those standards say. So if that would be helpful, we can send that along.
Because we're going to revisit kind of the IT security thing over the next 3 months, we would appreciate that.
Sure.
Ms. LaFrance, in another life, when I worked for a very large company, I thought the auditors couldn't figure out where I was cutting the corners. And they got every one of them in areas that I knew 10 times as much as they did. But I learned if I needed assets, resources to do my job, and my management wouldn't give them to me, it was really good to get the auditors to come and find those very things. And I resisted the temptation to say, I told you so. But that is one value of an external audit. And these guys, they've got to do triage on money, you know, and, you know, so, you know, there could be some value about it. I would suggest we think about it. I think we've got something on the agenda for Tuesday that adds a little bit about cybersecurity to the business recovery thing, and which I appreciate. So stuff for us to think about there, but you're exactly right. We're so hugely vulnerable. We put all our eggs in one basket that somebody can cut the handle off of it very easily. It's scary, really scary. Anything else?
Not really. I mean, I can say I was called Suzanne late last night as we were both reading the CAFR, and you know, my question to her was, does this look really good to you compared to last year's? So yeah, I just really want to thank everyone for their efforts on getting this to us much more timely, and yeah, thanks everyone.
Yeah, thank you. Mike, Scott, is there things we need to know that we haven't learned or been told?
Well, I think this has been a good presentation. Thank you. I've worked with Joy for
11 years now.
11 years now. So, yeah, in fact, we're neighbors almost.
Yeah.
So no, I think this is a good presentation.
Yeah, good. Just a little old business for us. Mike has a visual that he's going to give us that it kind of shows the cyclic nature of his department's work, which I intend to pass on to our colleagues and say, if you got pet projects you want to have an audit done, you know, here's the times a year we can more likely slot them in without, you know, overloading them at bad times. So that'll be coming forth. All right, anything else?
Yeah.
Appreciate you all.
I would just would be to recognize the extraordinary work that both Kelly and Pam and Raza did in supporting the audit. That to remember that we issued the 2017 audit in January, and they were able to complete all the work for 2018, do the audit, and get the opinion issued in 7 months. As I think what Joy was saying, a testament both to the team as well as the systems we have in place. And I think we are very hopeful that 2020 will be a busy time. We'll be having to do 2019. We're going to have to sell ML&P. We're going to have to deal with a lot of the earthquake reimbursement stuff. And but I imagine that we will still be able to get the CAF done in a very timely manner. But I would just say thank you to the team for a great job done.
I just want to say one more thing though. We could not have done this without the departments. There are significant amount of stepping up that happened. And several departments, I would call out the Public Works. They were amazing this year. They assisted quite a bit, and so did APD and AFD, and with what resources they had. So I just wanted to say that about the departments as well. We can't do this without them.
Seems to me, maybe in one of the budget presentations, that you had a little discussion about potential monsters out there, liabilities that could crawl out of the creeks and grab us. You did make some presentation about that.
Well, you'll hear all about it tomorrow.
Sorry?
You'll hear all about it tomorrow at the Finance and Audit Committee about the budget for 2020. And so to preview some of the issues, earthquake reimbursement is going to be a challenge that we're going to have to deal with. But beyond that, it's pretty much standard for the course in terms of running within a tax cap where we have limited finances and costs go up every year. And everybody we want to solve homelessness, we want to provide police and fire. How do we do it? It's a zero-sum game. There's always has to be given somewhere.
I've been around this town long enough. I don't expect us to have some environmental liabilities, that are odd, huge scale jump up. Continues to spook me about liability, personal liabilities, settlements that are going on in our day. And the court cases we lose and stuff.
We're doing our best to be good operators, and so those types of settlements, we are hopeful, will not continue in the future. If you're a good manager and you deal with your people properly, theoretically you don't run into challenges like we've seen in the past. That's what Bill is here.
So, capriciousness of juries is troublesome. All right, any other questions, comments? All right, we're adjourned. Thank you all.